Hey there guys, and welcome back to Alex Invests. For those of you who don't know, I'm Alex. I'm a business owner with a degree in economics, and I've been investing since I was 18 years old. Today, as we can see, the markets are green, which you love to see it, right? A Monday morning, markets are green. Perfect. Today, I wanted to talk to you guys just about some general market trends I've been seeing and sort of where I see a big bull run coming. But the question is, do we see a drop before then? And I think we might. So before we get into that, I just wanted to mention a couple of companies. The first one is Very Good Food Company. Now, this one I've mentioned a few times here, but back when the first time I mentioned it, we were at $4 around. Now we're all the way up at over $9. With today, we're up again on the company, The stock has just been rocketing lately, which makes sense. I said we were going to see this, a little consolidation and then another big uptrend, and we've been seeing exactly that. I do see it continuing actually for a little while, but I would not recommend buying the stock now if you're not yet in it. I would wait for a pullback because it's bound to happen, We've been seeing all-time highs here continuing on a very big uptrend, And so I think we're going to see a bit of a pullback, and when we do, even I'm thinking about picking up some more shares, even though my cost basis is very low on this stock. So that's the first one. The other one is OXY Petroleum. This is one that I mentioned all the way back on my vaccine news video, actually, and I said this is a good stock to watch out for. And now, just last week, what happened? It was announced that Oxy is going into carbon capture, which is very interesting because what's another company that I've just recently mentioned that's doing carbon capture now? And that's FCEL, Fuel Cell Energy, right? I mean, that's one as well that I've been saying is a great company to get into. It was a pretty good time to get into the stock last week. They did their public share offering, which put a lot of downward pressure on the stock, and they ended up around the $6 mark, all the way from $9, right? And now we're seeing them recover here already. They're back up at above $7 now again. And I do see that continuing. I see them going past the $9 mark they made it to before, or past the $10 mark even. And I still see a price target here of around $15 to $20 in the next 6 to 8 months. Because we see where they're headed with this carbon capture. It's so good. They have proprietary technology on it, and it really is where we're going with in the future. We see that through Oxy too, right? Oxy Petroleum, it's a petroleum company, and they're now switching to carbon capture, and their price instantly jumps. They went up over 20% just last week, and today they're just barely down, right? And I think we continue to see this stock rise higher and higher as their own carbon capture platform as well sort of evolves and moves forward here. Anyways, let's get into it though. But before we do, I just wanted to mention, as always, please like and subscribe, guys. It really, really helps out the channel, and it helps me create more content for you guys. So I just wanted to start off here by mentioning a few interesting things going on this week. First of all, today, the Canadian IV Purchasing Managers Index came out. Now, what's interesting about this is it makes quite a good prediction about macroeconomic activity in Canada, and it's essentially an economic index which measures the month-to-month variation in economic activity and gives us a good idea of GDP as well and sort of what's going on economically here. And we actually have that data already, so we can see for October 2020, we're at 54.5, right? November 2019, we're at 60. So again, we're getting close to that number again, which is very good, and also shows us that our economic activity in Canada is picking up again here, and we're getting close to that 2019 number. And obviously, normally we would want to be a little bit higher than that number, but because of COVID, obviously things happened and we're not. But we are moving back up there, which is nice to see. And we can see here, obviously, this is March. We see it dip down a lot, right? And then recovery from there. So that's what we want to see moving forward, obviously. And I think that's why we're also going to see another bull run moving forward here. Then on Tuesday, preliminary GDP comes out for the Eurozone. So we're going to get a glimpse of how Europe is doing right now. On Wednesday, the Bank of Canada will come out with interest rate decisions. So that is also going to be very interesting moving forward, and will have likely a pretty big impact on where Canadian stocks are going to be headed. But I think we're going to see mostly unchanged numbers, so this is going to be good moving forward, because we still need those low interest rates right now in order to have our economy continue and our stocks continue to move upwards here. I mean, we know the US as well is keeping their interest rates very low or at zero up until 2023, and I think Canada will likely follow there. So Thursday is also a day to watch, because we have the Airbnb IPO coming out. Now they are selling 50 million shares between $44 and $50. So at the midpoint, they would be raising about $2.3 billion on this IPO. And this would bring Airbnb's market value somewhere around the $35 billion mark, which is interesting because right after the pandemic, they had a valuation of about $18 billion. Of course, before the pandemic, they were around that $30 to $35 billion mark. So watch out for that IPO. I'm not sure if I'm going to invest myself yet. I'm going to see what the price is when it opens and whether or not I will be buying. If it's around the $44 mark, I may think about picking up some shares there. And now we get to Friday, the deadline for US Congress to pass a funding bill to avert government shutdown. So if Congress does not pass a funding bill of any kind by Friday, then federal agencies are going to run out of money, and we're going to see another government shutdown here. Now, of course, with these talks, we have to talk about stimulus, right? Which the proposed bill is now $908 billion, down from the $2.2 trillion, which were suggested earlier this year, just a few months ago. But again, Mitch McConnell is coming in here and saying the $908 billion is too much. And now he wants only a $500 billion stimulus package, which personally I don't think is going to be enough in order to stimulate the economy to the level that we need it to be stimulated right now. I mean, we're seeing 712,000 new unemployment claims filed just last week in the US, and 4.5 million people filing for extended unemployment here. On top of that, only 245,000 new jobs were added in November, and this is very low when compared to the 610,000 jobs which were added in October. Again, daily cases and hospitalizations because of COVID-19 reached all-time highs last week. And although a vaccine is coming, currently we only see 100 million doses that are ready to go, and those are going obviously to the people who are most at risk here. So I think we're not going to see the full effects of a vaccine for quite some time. Even President Biden agrees that the economy is stalling here. So I think we will be needing a higher stimulus package than the $500 billion, especially if we want to see a good bull run here moving forward while the economy is recovering. I mean, the Fed really is behind everything here. It's the reason we've seen the stock market rise so much since those March lows, right? And I think it's the reason we're going to continue to see that with the Fed keeping interest rates at or around 0% up until 2023, which is obviously great news for the stock market and is one of those reasons why I see a nice bull run happening here soon. Then obviously the purchasing of government and corporate bonds and the relaxation of inflation targets that we saw in August, which had a positive effect on capital markets and of course cryptocurrencies, which are again hitting those all-time highs right now, and I will probably do a separate video on cryptocurrency as well, but I think it is important to have a bit of your portfolio in the crypto market. Another big thing which I think people tend to forget is that we saw 20 million new investors come into the market in 2020, showing that there's a lot of investors still out there who haven't actually gotten back into the market yet and are just now thinking of doing so. We got to remember these big investors, they've been out of the market, and that's $4.5 trillion in money markets that are still waiting to be put back into the stock market or other investments. So I think when we see those investors come back into the market, we're going to see another big rise as well in stocks here. So obviously we're seeing recovery. I mean, we're seeing the NASDAQ, the S&P 500, the Dow, they're all looking to make new highs right now, or have been making new highs for the first time since 2018, right? And this is all good, but the problem is we're amidst these high COVID cases, high hospitalizations, a stalled labor market, right? And although investor sentiment is at an all-time high right now, with a lot of people thinking there's going to be a big bull run coming, but because of all this going on, I do see investor sentiment going down and volatility going up a bit again here in the short term, meaning that we see a downtrend in stocks for a little bit, and then once that is over, then I see us going into the next big bull run. So I wanted to show you guys a chart comparison between the S&P 500 on this side and the CBOE volatility index on this side, right? And we're at the same intervals here and everything, so we can see sort of how these trend together. When volatility goes up here, we see the market represented by the S&P 500 here, the composite index, going down, right? And then here, volatility comes down a lot and the S&P rallies upwards, right? But we're seeing this come down because of the investor sentiment, right? But because of all these rising COVID cases, stalled labor market, and everything I've mentioned, right? I think we're going to see a bit of a reversal here in the VIX, and we're going to go up a little bit here in volatility, meaning we will see the general market come back down a little bit. So I do expect that in the short term. And then once all of that news is settled and the fact we won't get the vaccine as soon as people think, and hospitalizations go down again, then we're going to see this come down again, and we're going to see all-time highs and the next bull run from there. So in the immediate future, I do see a bit of pullback actually coming before we see the next big run that we're going to see in the next few years because of low interest rates, because of stimulus coming out. That's another big one. Once stimulus comes out, I think that is going to be really the start of everything we're going to see moving forward in the next few years. So for those of you who aren't in the market right now, I suggest you maybe wait for a bit of a downturn. Well, depending on what stocks you invest, buy on down days, right? Buy on the red days. But in general, I think buying once the market is down here in the next few weeks, I see this happening. That's a good time to buy, because after that, stimulus is going to come out soon and all the other good things, and we're going to see the market rally hard here. So the other chart comparison I wanted to make with you guys is the XLP, which is the consumer staples sector ETF, and the XLY, which is the consumer discretionary sector ETF. So we can see here, the rise since October, we see more percent coming in the XLY here compared to the XLP. And basically the XLY can describe our wants, where the XLP describes more of the consumer goods that we need. So because we're seeing more of an increase in the XLY here, that's quite a bullish indicator, because this shows that investors are favoring the XLY, which is more those goods that we don't really need to buy, but buy because we want them, and is another reason why I see soon we may see a big uptrend in the entire market like we've already been seeing. And it could be one of the reasons why, since we're already seeing this, that we are reaching now all-time highs in the NASDAQ and in most of the other indexes right now. So all in all, that's my week here in review and what is happening this week and what I think we will see in the coming weeks. Other than that, I hope you guys enjoyed the video. If you did, please like and subscribe. Leave me a comment because you know I love getting comments. And other than that, have a fantastic day, and I'll see you guys tomorrow.